The importance of having a systematic approach to investing. When it comes to investing, many individuals find it challenging to consistently beat the market averages and make profitable trades. This is often due to the lack of a systematic approach and risk management strategies. In the next few minutes, we will discuss the significance of having a well-defined system in place to give you an edge in the market and increase your chances of making successful investments. The pitfalls of investing without a system. If you take a moment to review your trading history, it is likely that you will find it difficult to consistently outperform the market averages. In fact, it is probable that you have experienced more losing years than winning ones. Even in the years where you did make a profit, it is possible that the gains were not enough to compensate for the losses incurred in other trades. The need for a systematic approach. The key to successful investing lies in adopting a systematic approach that is time-tested and proven. By following a set of predefined rules and strategies, you can make informed decisions on when to buy and sell investments. This systematic approach eliminates impulsive and emotional trading, which often leads to poor investment outcomes. Benefits of a systematic approach. Consistency. A systematic approach ensures that you make investment decisions based on objective criteria rather than emotions or market noise. This consistency helps you avoid impulsive trades that can result in losses. Increased probability of success. By following a proven system, you increase your chances of making profitable trades. A systematic approach allows you to identify opportunities that have a higher probability of success, minimizing the risk of potential losses. Risk management. One of the critical aspects of a systematic approach is implementing risk management strategies. These strategies help protect your capital by setting stop-loss orders and determining the appropriate position size for each trade. By managing risk effectively, you can limit the impact of losing trades on your overall portfolio. Long-term perspective. A systematic approach encourages a long-term perspective on investing. Instead of focusing on short-term gains, you can align your investment decisions with your long-term financial goals. This approach helps you avoid chasing quick profits and allows your investments to grow steadily over time. Conclusion. Investing without a systematic approach can lead to inconsistent results and potential losses. By adopting a time-tested and proven system, you can increase your chances of beating the market averages and making profitable trades. A systematic approach provides consistency, increases the probability of success, incorporates risk management strategies, and encourages a long-term perspective on investing. So, take the time to develop and implement a systematic approach to enhance your investment journey.
As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.